Do you also love the German taxation system when you are buying a property here? We all love it. No, this is a joke, of course. No one loves it. However, you need to be aware of this thing that are happening here. And that's why we have finally, after years of searching, found a tax expert who was willing to come to our Berlin real estate talk. Frank, thank you for having me tonight.
Hi.
If you want to contact Frank, please go on his website, which is HSB Berlin Steuerberlin, sorry, HSB Steuerberlin. And I hope we can respond to most of your questions today in this webinar. So, hello everybody. Thank you for watching 37 minutes in hard German, talking about German tax law, especially, of course, related to real estate property. We will now cover this. Frank, thank you that you are here tonight. Our 43rd Berlin real estate talk. And you are the first tax expert since a couple of years who managed to come to this desk in our little office, because all your colleagues are shying.
Yeah.
They're saying, "Oh, I have too much work. I'm not going onto social media or YouTube because I can't cope with it." Yeah.
Yeah. That's true. That's a really hard time with a lot of work for us in the last years.
Yeah.
It's quite good to have a lot of work, but it was quite hard or complicated for us to be open for new clients.
Yeah. Maybe just to quickly introduce you, you are the owner of HSB Steuer Berlin. You have two offices, one in Kudamm, which is City West, and one in Weißensee, which is the former East. You have 18 employees, together with a colleague, I think.
Yeah, we are two partners here.
Yeah,
right.
Partners, and you are active since 2016. And before that, you've been working at Ernst & Young. Is that correct?
Yeah, right. Yeah.
Perfect. So when you have questions, just to let you know, in this webinar or in this real estate talk, you can, of course, ask us questions on Zoom. I'm sure you know Zoom, how it works. There's a little tag on the corner and just ask a question in the chat. Of course, we can't see and we can't hear you. And if you have maybe missed an answer from Frank, you can watch the YouTube channel here at Black Label. A week later, after this record, the session we are recording it, of course, you can see that on YouTube and listen again to Frank's answers to your question. So the main topic, I think we maybe structure it in three major topics.
Yeah.
One is a private buyer.
Yeah.
We call that an expat living in Germany or in Berlin, buying a property to live in, which is client one. Client two is we have someone like I call a buy-to-let investor who wants to buy property in Germany and wants to rent it out, so not living in Germany. And the third client is someone who wants to buy more than one apartment, maybe a multifamily home, a couple of apartments through an SPV, through a German company. So let's start with the first topic. I'm an international client living in Berlin. I find property on Immobilien Scout, on an agent website, on social media. I buy the property. What do I need to be aware of tax-wise if I want to live there myself?
Yeah, if you want to live by yourself, then the tax purposes are quite easy. Because of you do not have to make any income tax related return regarding to your rental income. You have maybe a land tax payment on a quarterly basis, but when you use it as your private home, then you do not have any tax purposes to do.
Perfect. One problem less. Yeah, excellent. So then we have the second client who wants to buy property as a buy-to-let, and he maybe doesn't live in Germany. What's important there?
Yeah, it's important that we have different double taxation agreements between the countries. And regarding rental income, it's always says rental income has to be taxed in the country where the property is. That means you have to make a tax return regarding on your rental income from Germany.
Okay. So when it comes to things I need to be aware of before I purchase that property, what do you advise our clients?
Yeah, it's important to in the contract that you make a divide, or that you divide the part of the ground that you buy and the part of the building, because for tax law, or in German tax law, it's the ground. You do not have any benefits from the ground. It's like you buy it and you do not can use it in your tax return. You only can use a part of your part of the building, and that's why it is important to divide this in the contract.
So now you have purchased the property, you have paid the transfer tax, you're paying the land tax.
Yeah.
What's happening with the rental income? What do I need to be aware of as an international investor?
As an international investor, it's important that you do not have any tax benefits because you're not living here. That means you have a taxation between 14 and 30%. It depends on how much income you have. And important is that for the German tax law on rental income, you were to be taxed on your profit and on your profit that you earn in this year. That means it is important how much revenue do you receive and how much expenses you spend in that year.
Okay. So we have basically, just to rephrase that in my own words, you have no so-called tax allowances because you're not based in Germany.
Yes.
But you have the advantage, you are basically paying your income tax overseas, wherever you live, or another European country. However, the property is located in Germany, so all the income tax has to be paid in Germany.
Yeah.
And then, if I understand correctly, if there's a double taxation agreement, I am not paying any taxes in my home country because I've already paid in Germany, right?
Right.
Okay, got it.
Right.
So now we have the other investor. The other investor is also looking to do a buy-to-let investment, but he calls us up and says, hey, Achim, I want to buy for 1 million, 2 million, a multifamily house. I would like to invest in the German property market because I see now 4% interest, less buyers out there. I maybe get a bargain. I come up with a higher deposit. What's special there? They usually buy through a company. Is this correct?
Yeah. It's better to buy through a company because the taxation for the rental income through a company is better. You have something like a tax rate of 16% for the rental income, and that's why it's better to buy it through a company. And it's possible to pay interest to the company that gives the equity to the German company, and that's why it is good to make a company structure here in Germany.
Okay. And how do they usually set that up? Do they have a mother company in another country, or do they own that privately on their name, the German GmbH? How does this work?
It depends on the most of the clients have a company in the other country and as a mother company and set up a German company. It's possible to make it as a private shareholder, but the most bigger clients we knew have a mother company in the EU or other state.
Okay. So there are a lot of tax advantages they could use through that company system.
Brilliant.
If I'm correct. So first of all, is tax-wise, you would benefit. And then we would come to the second topic. So we now have covered purchasing a property. We now have covered rental income. And now we're checking the 3 different types of clients when it comes to selling the property. So when we have the first client, he lives there. He has bought a property, let's say 4 or 5 years ago. He now decides, hey guys, I'm looking to sell. So I'm going to a different country. What's important there tax-wise?
Tax-wise, there's if this client lives all the time in this property, then it is tax-free to sell it after a certain years. It depends on, but it's important that after buying and they are living the whole time in this building or in this apartment. So as a private client, when I am living in it, it's quite easy to make the right tax decisions. And if I rented it out and then I'm living for a few years in this apartment, then it depends on. There's a special tax law if you are living in the last 3 years and in this apartment, then it's possible to sell it tax-free, but you need this 3 years. And when you rented it out for the whole time, then you have to wait 10 years before you could sell it to use this tax-free law in Germany.
Okay. When it comes to the more professional investors who have a GmbH, what do they need to be aware of when selling?
When they sell the building or the apartment, then the profit will be always taxed. But there are different tax laws. If they sell one house and they want to buy another house, then it's possible to reinvest for tax purposes this profit. But they have to wait several years of time. We have to look on it on the similar case, but it is possible to reinvest the profit.
Okay, so that's quite a big advantage. So you can take the profit from the one transaction, keep the profit in the company, and then reinvest it. But I think they have to reinvest it in a certain period of time, right?
Yeah, you have to reinvest it in a certain period of time. It's 4 years, and it is important that that the house that you sell, you have to in your company for the last 6 years. So that means it is a possibility, but we have to look on it if we fit every circumstances of this case.
Perfect. So these are the 3 major clients. Nick, do we have any questions from the audience so far? Okay. Not so far? Okay. So then we would go through your different questions you have asked us prior to this webinar. You have asked us a couple of questions, which we selected, of course, the ones we feel make sense in this circumstance. So interested in building rental real estate business with minimum capital. That's something we all would love, minimum capitals. And saving taxes. Financing with bank mortgage and saving taxes with interest. Frank, maybe you just can explain tax-wise what kind of taxes. I think we covered already the 3 different topics. I think it's not a property where you want to live in. I think that's topic 1. So the question is, do you want to buy these properties in your own name, or do you want to buy that through a company structure? I think this is the first question.
Yeah.
You should tell us what you were looking at, and of course ask Frank in detail. And when of course a minimum capital, I can tell you this because this is more like a commercial question rather than a tax question. For international people, non-German taxpayers, the LTV ratio, so loan to value ratio, is minimum 30% these days. So you need to come up with 30% of the purchase price plus transaction costs. So the transaction costs are usually 10%, could say 12%.
Yeah.
Sign, but ballpark figure. If you see, let's say, property for 100,000 euros, you have to add another 10,000 euros. So that means just to come up with 40% of the purchase price. The rest you can borrow on the German high street lender or go through our international mortgage partners. There are a couple of them that would broker you the best deal. But equity-wise, I think if you don't have the 30% equity plus the 10% transaction cost, there might be exceptions for you, where we get you a deal real brokered with, I don't know, 20% equity plus transaction costs. So you might have 30% in total rather than 40%. We're just talking about buying through a company structure. I'm not talking about buying privately. This might be different if you are a German citizen, if you have a European passport, if there are some exceptions, but that's the broad figure. There are certain exceptions for you if you buy through a German company or German GmbH. If you have a German business partner who is based in Germany and he has already a track record, then of course the LTV ratio would go down significantly because the bank has someone they can, we call that a non-recourse finance against the GmbH, but they would also have someone liable sitting in Germany, which they have additional securities on. Because don't forget, you would have no additional securities on the property, except the property for the bank. So the bank only has a property. This means that they will give a big discount, a big write-off on the securities for you. Yeah. So this is, commercially speaking, the amount of equity you would need in either situation.
Yeah.
Tax-wise?
Tax-wise, it's important that only the interest is deductible for tax purposes. That means the repayment of the mortgage to the bank partner is not tax. It's tax from the tax purposes. It's irrelevant. It's not. You can do anything with it. It's only the interest that is relevant in this case.
I hope we answered your question. Sorry, I'm a little bit sick today, a little bit the flu, but I hope that's sorted your question. So then we have, what are the taxes which a property owner needs to pay on a regular basis?
On a regular basis, property owner needs to pay. It depends on, is it for private living or do I rent it out? For private living, I only have the land tax that I have on the regular basis if I live in my own apartment in Germany. If I rent it out, then I have to pay the land tax and the income tax.
Okay, I hope that answers the question, Nick.
We got a question from the chat. Is the interest rate also deductible in case the property is located outside of Germany?
I repeat your question just in case you haven't heard that one. So is the interest rate also deductible? We're talking about the German tax authorities. If the property is located outside of Germany. I might ask you the question again. So you are borrowing money outside of Germany to buy property in Germany, or do you structure it differently? Because maybe I misunderstood that question a bit. Did you understand it?
No.
Okay. Maybe you want to rephrase that question in the chat, and then we come back to you once you rephrase that. Because for us, it's important, where is the property located? Is it in Germany? Are you located in Germany? Are you buying through GmbH or not? How does this work? Yeah. Okay. So then if I buy and rent an apartment, do I need to pay tax for the rent I receive from tenants? I think this is an easy one.
Yeah. If I receive rent, I have to pay taxes.
The good thing is there are certain depreciations on, and of course you can write off a lot of costs, and you only have to tax a profit for not the whole rent.
Yeah.
And by my experience, when we have clients, they own 1 or 2 apartments, the tax return is very little.
We're
talking about a very small figure because we have progressive tax rates.
Yeah.
So that's the only difference for you as an international client is that you have no free allowances.
Yeah.
We both based in Germany, paying high taxes. We have free allowances for the first, I think, 10,000.
Yeah, for the first 10,000 and for the child, and there are quite a lot of differences if you are based in Germany.
But tax-wise, you need to have a lot of children.
That's true. Yeah.
So you don't have all these advantages, of course, but this is something you should be aware of. So yes, you have to do a tax return every year. This might be another topic I would like to address today. You do need to have tax returns in Germany, even if you're based wherever you are. If the property is based in Germany, every year you have to do a tax return. We can't do that as property managers or brokers. It always has to do a chartered accountant or a consultant who has a license in Germany. This is very strict.
Yeah.
Very good update.
Yeah.
So regarding the question, borrowing money inside of Germany for a property located outside Germany, but the buyers being located.
So the problem is that most of the double taxation agreements or treatments between the countries depends on where the property is. That means when the property is outside of Germany, it is always taxed outside of Germany. And if you borrow money in Germany and you pay interests in Germany for an apartment in Spain or Portugal or whatever, then it has to be taxed there. And that's why the interest is not deductible in Germany.
So I have a next question. Does Germany has a tax law similar to like-kind exchange section 1031 of IRS in the US? I'm not aware of section 1031 of IRS in the US.
Yeah, I'm also not. I knew that the US have different tax benefits for this for renting out apartments.
Yep.
And I think that is only relevant to check when you are based in Germany. When you're not based in Germany, I think we do not have such certain law, but I have to double check it on a certain case. I'm not able to answer it because the section of the IRS are quite as complicated as the German tax law, and that's why it's quite hard to answer.
If you're a US citizen, please always be aware of that you are being taxed worldwide of your income.
Yeah.
And of course, we cannot cover the US tax situation, nor can we know the details of the IRS. But of course, we do know that in Germany, as long as a property is based in Germany, you do have to pay taxes.
Yes, right.
Both on the profit you sell, if you sell within the 10-year period, and all the other things like anyone else. Of course, there are exceptions. If you come to Germany, live here, or if you set up a company before you buy it and then you put the property in the company.
Yeah.
So this is something Frank can structure for you, but you do need to have a minimum investment amount to make basically the fees for the tax accountant, for the lawyers, everything else worthwhile. So there need to be a significant amount of investment. So I think we have 2 more questions from the English section. One of them is related to taxes again. How are properties owned abroad taxed in Germany? Do you want to answer that question?
It is the same that I figured out a few minutes before. When you have properties which is based or located in Germany, it will be taxed in Germany.
Yeah, and
it doesn't matter where the owner.
And this, I think, within the European Union, is pretty much the same. So how are properties owned abroad taxed in Germany? This means you are living in Germany and you own a property abroad. And when you are being taxable in Germany because you are a German taxpayer, then you have to declare your rental income abroad as well in Germany.
Yes. Right.
But again, we have a double taxation agreement. So it really depends in which country the property is.
Yeah.
Because sometimes you even have to pay taxes in the country and in Germany if there's no
double taxation agreement.
So that's something.
Yeah.
You need to check, but I think in most countries
the most countries have double taxation agreement which are based on the OECD, and in this double taxation agreements, it's always said that the property is taxed where the property is. But we have different countries without any double taxation agreement, like Dubai or something like that, and then we have maybe a topic to new. But we are able to help you in this case if you have to pay taxes on this in Germany.
So then I have one question from you guys. Friedrichshain and Mitte have been very popular for real estate investments, and the prices is not so much affordable as before. Which neighborhood do you see as the next potential growth area in 5 to 10 years in Berlin? I don't think that's a tax question, by the way.
No, no.
A tax person here in the room, but of course I'm happy to answer you that question. But I suggest that you book a private consultation here on our website. You can book a free consultation with ourselves, with my team, or with myself online on blacklabel-properties.com. Go on the team section and you can book an appointment with one of our agents or myself, and then we can book a private appointment on that one. Frank, I have the last question for you, similar to the German one. A lot of people in Berlin are searching for an affordable apartment to buy or to rent. And we both know, I mean, you are a Berliner, I would say. So we both know in the last 10 years, the market has changed significantly from prices who were much, much lower than today to now much higher prices. So what would you do if you would be the ruler of Germany? Forget the democratic system. You would be the ruler of Germany, and you would just look through your through your tax expert.
Yeah.
What would you change to help the situation?
I would make it easier for private purposes to buy an apartment in Germany, like an expert who starts working in Germany and wants to buy an apartment because he wants to live for a long time here. I would make it easier for them to buy an apartment, to make something like a deductment of the property tax or of the property buying tax, and for the investors that they want to have something for later, or for when they do not work. I think it would be better for them to make it more easier to fulfill all of the complex laws here in Germany, because we have often taxpayers from other countries, and they are quite confused about the German tax law, and that's why it's quite complicated if you're not, it is not your mother tongue to understand what you have to do.
Yeah, I can confirm that. This is a big topic. However, we have that expert here today, Frank Hampicke, and if you want to talk to him, please feel free to contact him under his website. And his company is 18 people, 2 tax experts, chartered accountant, as we would say in the UK, HSBC Steuer Berlin. Frank, thank you for being here tonight.
Yeah.
And I hope we could answer your questions. And I think taxes in Germany is nothing you would like to talk about, but it's important for you as a property owner. And there are a lot of things you can do to improve your tax rate here in Germany, especially if you contact Frank before you buy and before you sell, of course, to make sure that you are always on the safe side. Thank you, Frank, again.
Thank you.